Hey, what's going on, everybody? I'm Dylan, and today we're going to be diving into the world of growth funds.
Whether you're a seasoned investor or just getting started, growth funds can be a game changer, offering the potential for significant returns by investing in companies with above average growth prospects. But with so many options out there, how do you choose the right one? That's exactly what we're here to explore. We'll break down the top contenders, their strategies, performance, and what makes them stand out in the bustling market. So grab your notepad and let's get into it. The Vanguard Growth Index Fund Admiral shares, ticker symbol VIGAX, is a standout choice for those looking to invest in the U.S. equity growth sector. It tracks the CRSP U.S. Large Cap Growth Index, offering investors a slice of large cap companies poised for expansion. What sets VIGAX apart is Vanguard's commitment to low costs, a crucial factor that can significantly boost long-term returns. VIGAX is particularly attractive for its portfolio, which includes leading innovators in technology, healthcare, and consumer services. These sectors are often at the cutting edge of growth, driven by consumer trends and technological advancements. The fund's broad diversification across these industries helps mitigate risk, making it a more stable choice compared to single stocks or sector-specific funds. Moreover, the Admiral shares of VIGAX offer an even lower expense ratio for those who can meet the higher minimum investment, enhancing its appeal for cost-conscious growth investors. In essence, VIGAX combines growth potential, cost efficiency, and quality diversification, making it a compelling investment for those looking to tap into the dynamic segments of the economy. The Fidelity Blue Chip Growth Fund, ticker symbol FBGRX, targets investors keen on high-growth, large-cap U.S. companies, blending the allure of growth with the stability of established firms. Its active management approach sets it apart, enabling nimble responses to market changes and strategic selection of stocks poised for significant growth, especially in tech and consumer discretionary sectors. FBGRX's investment in blue-chip companies, those known for their financial robustness and market leadership, places it in a sweet spot for capturing growth while mitigating risk. This focus, combined with the seasoned insight of Fidelity's portfolio managers, allows the fund to navigate the volatile waters of growth investing with a steady hand. The fund's historical performance underscores its effectiveness, showcasing the benefits of its strategy and management acumen. For those seeking growth through the lens of established giants and the expertise of an active management team, FBGRX offers a compelling proposition, balancing growth potential with a degree of safety in the volatile growth stock arena. Before we get to the rest of the stocks, I want to remind you to click the link in the description to check out Insider Newsletter. I've reviewed over 100 stock picking services, and Insider Newsletter gets the best returns. And for a limited time, it's only $1 to try. The Brown Capital Management Small Company Fund is a specialized investment fund that zeroes in on the often overlooked segment of small cap companies with the potential for explosive growth. This fund is for those investors who are looking for significant growth opportunities beyond the usual suspects of large cap stocks, diving into the realm of smaller companies with innovative business models, strong competitive advantages, and the potential for rapid expansion. Managed by Brown Capital Management, a firm with a strong pedigree in growth investing, this fund employs a meticulous selection process. The fund's managers look for companies with sustainable business models, robust financial health, and clear paths to growth. This careful curation is crucial in the small cap space, where the potential for high returns is accompanied by higher volatility and risk. What makes the Brown Capital Management Fund particularly appealing is its focus on exceptional growth companies. These are companies not just with rapid revenue or earnings growth, but those that have sustainable competitive advantages, enabling them to maintain their growth momentum over the long term. This approach seeks to mitigate some of the risks inherent in small cap investing by focusing on quality and sustainability. The Brown Capital Management Fund's strategy has a clear emphasis on sectors where small companies often lead innovation, such as technology, healthcare, and specialized consumer services. Investing in such sectors allows the Brown Capital Management Fund to capture the growth potential of emerging trends and technologies before they become mainstream, offering investors a chance at outsized returns. However, the fund's focus on small cap companies and its selective investment approach mean it may have a higher expense ratio compared to larger, more diversified funds. This is a consideration for investors, balanced against the potential for higher growth rates and the expertise of Brown Capital Management in navigating the small cap landscape. The Champlain Midcap Fund targets the sweet spot of the market by focusing on mid-sized companies that exhibit both the agility of small businesses and the stability of larger corporations. This fund is a prime choice for investors aiming for a balanced approach to growth, blending the rapid growth potential of smaller companies with the risk mitigation that comes with more established firms. Managed by Champlain Investment Partners, this fund is characterized by its selective investment approach, prioritizing companies with strong competitive positions, superior management teams, and significant growth opportunities. The aim is to identify businesses that are not just growing now, but have the potential to continue growing at an above-average pace due to underlying competitive advantages and market dynamics. The appeal of the Champlain Midcap Fund lies in its focus on midcap companies, which are often in a phase of accelerating growth and expansion. These companies, typically with market capitalizations between $1 billion and $15 billion, are well past the volatile startup phase, but still possess significant upside potential compared to many of their larger counterparts. This segment of the market can offer a fertile ground for finding undervalued opportunities that have not yet been fully recognized by the broader market. The fund's portfolio demonstrates a diversified approach, spreading investments across a variety of sectors. This diversification helps to buffer against sector-specific downturns and capitalizes on growth opportunities across the economic spectrum. It's a strategic move that allows the fund to be resilient in the face of market fluctuations, making it a potentially more stable investment choice for those wary of the high volatility often associated with small-cap investments. The iShares Russell 1000 Growth ETF is a strategic choice for investors seeking exposure to U.S. large and mid-cap growth stocks. Tracking the Russell 1000 Growth Index, this ETF encapsulates companies poised for above-average growth, making it an efficient tool to access the growth segment of the American equity market. This ETF's portfolio spans across sectors like technology, healthcare, and consumer discretionary, reflecting the diverse drivers of U.S. economic growth. The technology sector, a notable component, underscores the fund's investment in innovation and digital transformation leaders, aligning with growth trends. The iShares Russell 1000 Growth ETF stands out for its liquidity and cost efficiency. As an ETF, it offers the flexibility of daily trading with a low expense ratio, appealing to both individual and institutional investors. Its broad diversification mitigates the volatility typically associated with growth stocks, offering a balanced risk-reward profile. In essence, iShares Russell 1000 Growth ETF offers a straightforward, diversified approach to investing in the U.S. growth sector, combining the potential for high returns with the benefits of liquidity and cost efficiency, making it an attractive option for growth-focused investors. The Lumis Sales Growth Fund, FBGRX, offers an active, discerning approach to growth investing, focusing on U.S. companies with sustainable growth prospects. What distinguishes FBGRX is its management team's skill in selecting companies poised for long-term growth, leveraging deep research to find businesses with above-average growth in earnings and revenues, strong competitive advantages, and solid financial health. FBGRX is built around the conviction that investing in sustainable growth leads to long-term capital appreciation. The fund's flexibility to invest across all market caps, from agile small caps to established large caps, allows it to capture growth opportunities throughout the market. This adaptability, unbound by market cap constraints or index compositions, enables FBGRX to pursue the most compelling growth stories across the economic landscape. Active management grants FBGRX the agility to respond to market shifts, positioning it to capitalize on emerging growth opportunities swiftly. This makes the Lumis Sales Growth Fund an attractive option for investors seeking a dynamic approach to growth investing, combining the benefits of broad market access and active strategy to aim for significant long-term gains. The Schwab U.S. Large Cap Growth ETF, SCHG, offers investors an efficient path to engage with the large cap segment of the U.S. stock market, focusing specifically on companies poised for growth. This ETF tracks the Dow Jones U.S. Large Cap Growth Total Stock Market Index, encapsulating a selection of large U.S. companies expected to grow at an above-average rate compared to their peers. It's a choice well-suited for those aiming to harness the potential of major growth companies within the stability of the large-cap space. SCHG's appeal lies in its blend of simplicity, cost-effectiveness, and exposure to growth dynamics. The ETF structure provides investors with the liquidity of stocks, allowing for easy trading while maintaining a diversified portfolio that mitigates individual stock risk. Moreover, SCHG boasts a low expense ratio, making it an attractive option for cost-conscious investors seeking growth exposure without the hefty fees that can erode returns over time. The focus on large-cap growth stocks means SCHG investors gain exposure to some of the most influential and innovative companies in the U.S., spanning sectors like technology, healthcare, and consumer discretionary. These sectors are often at the forefront of economic trends and technological advancements, driving growth and offering the potential for significant capital appreciation. By investing in SCHG, individuals tap into the growth stories of leading companies, benefiting from their market dominance, innovative capabilities, and potential for sustained earnings growth. This strategic positioning makes SCHG an enticing option for those looking to balance the growth potential of their portfolios with the relative safety and stability of large-cap stocks. And if you really want to make money with the stock market, make sure to click the link in the description to check out Insider Newsletter. I've reviewed hundreds of stock-picking newsletters, and Insider Newsletter performs the best by far. On top of this, it's only $1 to try, so again, click the link in the description to check out this newsletter.